Good morning, everybody. It is Cowboy. It is Friday, the 22nd of December, and we just had some data pop up, so we are going to take a brief look at that. As far as the CPI data, I think that came out today. So not it's core PCE. I think they call it something different. It's not exactly PCI. It is inflation data, and it probably pushed markets around. We're going to take a look at the chart very shortly here. We're going to actually jump pretty much straight into the content. Just a quick look at this QR code. Over at Algo Factory, what we do is we help people become traders. So if you're not yet a trader, we can teach you how to be a trader. And if you are already a trader, we can help you improve your trading, right? So we can help you also get on the road to building an algorithm that you can pay a coder to translate into code that will trade for you. So basically you can turn that on, walk away. You can't completely leave it alone, but you can basically let it trade for you all day. Just come in and kind of check things here and there. So that is an absolute beautiful thing. I've already got a couple of algos coded as it is right there. So in the meantime, just zap that QR code or go to www.algofactory.tech. If you are watching this on YouTube, like, subscribe, notification bell, but make sure you mash that like button. All right. And also, we are now streaming on X, so that's pretty cool. Hope you all are enjoying that. Let me get rid of this QR code. I am going to run over to grab some links and see if I can spread them around, get a few people in. Should be fun. Let's see, give me a second. But yeah, it's a quiet Friday. Look, this is a Friday that's like right before Christmas. So you will find that a lot of, there's just probably not going to be a lot of volatility. There's probably not going to be like a lot of people in the market. It's just very quiet. Right before Christmas, and when nobody's trading, that means nobody's trading. What do I mean by that? I mean that basically, how do I put this? So you need volatility to make money trading. Price has to go up, price has to go down. If price is not moving, then money is not made. Okay, and that being the case, you will have problems trying to trade. Money, price has to move. It's really, really simple. So if that's the case, other people will also not trade because price is not moving, and it's just a negative feedback loop. So that is just how that works, and that's what happens around Christmas a lot of the time. Now, there are some years where you actually do have opportunities where, for some reason, might have something to do with the market or geopolitics, whatever it might be, but December actually ends up being a decent month to trade all the way through early January. But usually the kind of almost like a rule is that you just be ready to back off of the charts and trading from about now. So basically like from Christmas, which is a few days from now, all the way through, say, the first week of January, something like that. It just gets real quiet. And it's a great time to study. It's a great time to do a lot of things. But there has been price action. As a matter of fact, anybody who was in the private room last night got to follow a pretty cool trade. It ended up kind of ticking me off a little bit, but I mean, that's just like part of the game. I still won the trade. But I watched my profit evaporate. Not all of it. I took profit to the point where even if I lost the trade, I still would be ahead, and I was. But man, within minutes, that sucker moved right back to where it came from. So that's one thing we're going to cover today, what happens with Bitcoin in particular. Very, you call it scam wigs, you call it a lot of things, but the way the price action works in crypto is that if you are trading, you have to be ready to take that profit, especially when you see a quick move in the market. And so this is a trade that I had put on, and we'll tell the whole story here in a minute. Right now we're looking at the euro, and I just want to see what has happened with the data that came out. We're going to run down to the 5-minute chart here. Let me erase that drawing. That was a demonstration for a YouTube short, that drawing there. Okay, so it looks like the announcement has pushed price down a bit. So strong dollar announcement. So let's see what actually happened with it. That means inflation came in, I'm guessing, higher. Yeah, higher than expected. Let's see. GDP, that's what, yeah, okay, see, okay, we got GDP month over month and PCE. So let's see, maybe GDP was high, inflation was low, let's see. GDP was actually lower than expected. So you think that would mean, oh no, that was Canada. That was Canada. So USD PCE index came in a little lower than expected. So what's going on right there is that the idea would be that if the PCE index came in lower than expected, I believe that is an inflation metric. Let's see. There's an actual grade in the forecast good for currency. So this should have been bad for currency. This should have made dollar weaker. But according to the charts, that is not how this is going. So it looks like it was kind of a nothing burger of news, right? So it looks like dollar got stronger on the news, or not. It might just be that the news was a nothing burger and a lot of money that was kind of waiting for the news just got back into the market, and the direction was, that was the direction. Let's see how it is on the granular 1 minute time frame. Okay, so yeah. So this is like a dollar weaker scenario, right? Announcement right at 6:30. And the euro went down, meaning dollar stronger. Now it's headed back up, dollar weaker. It just looks like chicanery that you would see in a low volume market. So remember, and again, I did a little bit of, I did a video on this and posted it. I think it comes out today at 8 a.m. And basically what there is to know is that at the end of the calendar quarter and end of the calendar year, a lot of times you have options expiring, right? Even at the end of the calendar month, but especially at quarter and year. So now when you have options expiring, what's going to happen is you have a lot of very large players, and they need the price of certain things to be within a range for them either to make good money or to not lose money. And if you are approaching the end of that calendar quarter, you might find that price gets kind of forced into whatever that box is, right? Not really easy to know what that is, but you can tell because you'll see price acting really strange. You'll have your algos that are usually performing at a certain level of success, and all of a sudden that last couple of days, it's like, man, just the algos are working. I don't get it. And it's because price is being forced around, and it's very common. I made a rule at one point, whereas I just wouldn't trade the last day of the month. I just wouldn't do it because I just kept having issues like that. So it's just a good thing to know, a good thing to understand how that works. Okay, so just taking a brief look at our private group, seeing if anybody has any questions. I got Entertain Me. Thank you for coming on in, man. Appreciate that. That's one of my Twitter buddies. So good. All right, so we can look at the chart here. It looks like the euro is actually going to continue down. That's a dollar strong narrative, but that's where things were going at any rate. Just to look at the charts for the dollar to get a little bit stronger is just kind of what was going on. So it looks like the Dixie might be actually pulling up. The Dixie is the dollar currency index, and it matters. The Dixie matters in a lot of different markets because everything is pretty much traded against the dollar in the US and really around the world in a big way. But if you're trading like US equities, stocks, those are all traded against the dollar. So, it's Amazon is worth this many dollars, whatever, right? Google is worth this many dollars. And so when dollars get stronger, then Amazon's price is effectively weaker, right? Because Amazon value didn't change in that short time. Not necessarily. I mean, it could, but, chances are it didn't, especially in kind of a not volatile time. So if the dollar gets stronger and Amazon's value doesn't change, then Amazon's value in terms of dollars will get weaker. That's just how that works. And the same thing happens with like when you're comparing currencies. And we can see that this is on the 30-minute chart. On the last like hour and a half, the dollar, the Dixie has gotten stronger compared to other currencies. Now this could be just a brief thing that happens, just a news kind of spawn thing, because right now overall the dollar is bearish, like compared to other currencies, compared to the euro, the Japanese yen, the British pound, a few others. That's what the Dixie is, and the dollar is bearish. So right now dollar is getting weaker. It's getting hammered down pretty good, and that actually should be giving some buoyancy to equities over the past, 3 days or so. I know that we did have, and I'm going to take a look at the SP 500 here. I know we did have kind of a puke up in the markets a few days ago, and that had to do with some data supposedly that came out. But you can see here, let me open this up. You can see here, oops, that the last couple of days it's been lifted back up, the equities market. So this is the SP 500. So you had all this upward action, right? A lot of upward action. And I mean, this big candle like that, there was nothing that big in a bearish way since October. So all through the end of October, all through November, all through December, it's nothing but up. And then all of a sudden the market pukes out just a few days ago. And that actually had to do supposedly with some data that got revised in the GDP. So it's 3-month-old data that got revised. That's the story we're given, and that's fine. I don't really care, if it's real or not. We're going to trade the market based on how the market trades, and the market trades based on, news information, right? So the news is oftentimes disingenuous, but, and I'm being polite there. But the reality is that it's not for us traders to be like, oh, well, that they, I'm not going to trade because this is a lie. Like, okay, you're not going to make any money. Like, it's not about lies and truth. It's about what the market wants, and you got to want what the market wants as a trader. And so in this particular situation, there was a big move down, and it got held up. So I don't know if somebody screwed up. I don't know if they just wanted to pull back. I don't know. It might have just been natural, but this move down did occur at the same time as that data. And a lot of the narrative that we're given in the news is blaming of said data, right? So, that is what that is, right? So it's being held up, and to go to like a higher time frame and look at the structure of the SP 500, we can kind of analyze what might happen. And of course, a lot of this is going to depend on what Jerome Powell and company decide to do. Jerome Powell had been hiking rates for a time, and that did wreak havoc on weak investments, fundamentally weak investments like ESG, because those investments are fundamentally weak. They're not marketable in the real world. When you have cheap free money and you have a bunch of bankers in, Switzerland controlling things, you can cram money into bad investments when money is basically cheap or free. But when interest rates go up and money is no longer cheap or free, then those kind of investments fall apart. That's just how that works. Those companies were held up by artificial money, right? So when the money gets kind of more real, then bad investments fall apart. In the meantime, that there's a lot of spill off right there, and a lot of these other companies kept spilling off all through 22, right? So now we have the equities market actually heading up, and there's a very quiet money printing going on. Actually, everybody's talking about, oh, we're not printing as much money. We're printing plenty of money. It's just like it's not done in such an obvious manner. There's interest earned on the repo window market, like the reverse repo facility. Money that's sitting in there earns interest. Money in Fed accounts earns interest. Like, there is money being printed in the form of debt. It's always debt. We're just not printing trillions of dollars like we did during COVID, right? We're supposedly letting things fall off the balance sheet. There's a little dent in the balance sheet, the Fed's balance sheet. That's more fiscal policy than monetary policy. But either way, there's been a bit of tightening, and it might be that tightening is coming to an end because, again, just last week during the FOMC, Fed Chair Powell pivoted and said, okay, we got to think about maybe cutting the rates. So what does all that mean? Well, in the U.S. and just in every country that relies on fiat currency, which at this point is all countries, the price of money is going to affect how markets work. And like I described earlier, when money is cheap or free, then markets go up because money is just easy to come by, especially for large companies. When money is not easy to come by, when it's expensive, there are a few things that happen. First of all, it's just harder to come by. It's more expensive, so people are less willing to take that money and put it into markets. They maybe can't even afford that money, right? Because it's more pricey. The other end of it is a lot of collateral melts away. So the way that things have worked is that when these treasuries were created back when the rates were really low, right? Sure, the bonds are going to all mature to the face value, right? But what matters when you're talking about collateral, like a bank holding treasuries as collateral, those bonds are fungible. They can be sold, even though they're not mature yet, they can be sold, right? For money. They can be sold for, actual cash to prop up the banks, right? And then this is a bank conversation. Although this does apply to a bunch of companies, but banks are the primary company to which this conversation applies. So during COVID, a bunch of like very cheap money, basically 0% interest treasuries, got printed and given to shore up all these companies so they didn't fall apart during the pandemic, right? So because they got very cheap money and then we have a rate hike afterwards, the new bonds that are available, because they're at a higher yield, those bonds have effectively cut the value of the older bonds to a fraction of its former value, because now there are much, much better bonds that can be sold to the secondary market. So it's like basically everybody got a hoopty to hold their company together, and now everybody's getting BMWs and nobody wants the hoopty. So the hoopty's value gets even worse. Nobody's buying it. So all these banks collateral that they got throughout, like, say, 2020, 2021, early 22, all that collateral that was holding up those companies has now diminished in value. And those companies are on very weak standing. Now, I imagine that this can get fixed by just giving these companies better bonds and, basically rescuing people. But the companies who had a weak foundation to begin with from a fundamental standpoint, like the ESG companies, those ones are just in big trouble without a subsidy. If you're not being subsidized as an ESG company, you're in big trouble right now. And there's a lot of them failing. So, that's a structural conversation. That's actually explaining what has happened to the economy. In the meantime, they have been cramming money into the market. And so you do see a lot of companies going, like the S&P companies, going from 3,500 back in October of 22 all the way up to its highs. Literally right now, it's at its prior all-time high, and it made all-time highs this month sometime. Let's see when we got new all-time highs. Let's go to a lower time frame. And I can tell you it's bullish overall, Everything's bullish overall, but new all-time highs were just 2 days ago, right before that big puke. Right, the big puke happened after the all-time high. So is that going to act as like a double top chart-wise? Is that going to, double top is very bearish. Could that actually be a double top? I mean, technically it is a double top, but that means like you have basically these two wicks coming up like antennas, basically. These wicks here and this wick right there. If this current candle, which will close in 6 days, so this is a weekly candle. If this weekly candle closes below and it never goes higher than this current, this last week's orange candle right there, then actually that's a sign we could see a pretty big fall. Now, these items are pretty heavily controlled. So, that's kind of almost neither here nor there. Almost. But these things also can matter. I mean, in the end, once a chart kind of comes into its own, unless you really have a lot of money, it can be tough to prop prices up. They may be forced to let it fall. You can't just keep stretching the balloon without it popping. So that's just the whole work, the whole, I should say, groundwork, right? This is what's going on. So we'll take a look at Bitcoin briefly here. Bitcoin's showing bullishness right now, even still. It's coming up like on the weekly, the last month and a half. It keeps bumping its head on 44,000. It's struggling, but it looks like maybe a flag, something like that. Bitcoin's tricky. It can form what looks like a bull flag, but it's not a bull flag, right? I mean, that can happen. You'll get these scenarios where it's just, in my opinion, it's designed to confuse people. And I did a brief video, and I think it's coming out today. It's a short on what a bull flag is, what it looks like, why it exists, but how I trade them. But right now, price just continues to kind of keep pushing up towards those highs, right? just keeps pushing up towards this high. So eventually, if it can break this high from back in, what is this, December, early December, then we can see price head up towards like 48,000. But what we could also be seeing is one of these BART head tops, right? So what's a BART head? It's called a momentum ignition algorithm. And basically it tricks people into pushing price around for the market makers. It causes people to panic sell, panic buy, and you get these kind of square tops that look like Bart Simpson's head. And we could be looking at one right now. This is Bart's head, possibly his Bart's hair, right? And now is it going to go down and create a Bart head? It's possible. It's very possible. We could be looking at the beginning of a very long consolidation or even a higher time frame Bart head, right? So we could be looking at the beginning of this. And there's your high time frame Bart head. Could head down like that. Very possible. Bitcoin's tricky like that. But I can tell you that the high time frame algorithms still look pretty bullish, but they tend to look bullish right now. And you still can get mad pullbacks during that time. I can tell you that right now. But I mean, it wants to go up, but it could head down first. It's very possible. If somebody said, hey, you got to make a decision right now, price going to go higher before it goes down, I would take a look at the liquidity maps and I would get a map. And once I have the map, I look at it, which is happening right now. It's going to bust out here. All right, so I would say price probably wants to just grab down at like the low 43s because there's liquidity down below price right now. A lot of people keep thinking price is going to break 44,000, right? So because they think that, then they keep going long. And because they go long, they put liquidity down below price, right? So when you do that, you are going to entice the market makers into pushing price towards liquidity. So what does that all mean? What does that all mean in English? Well, here's the deal. So people think price is going to go probably to 48. I know a lot of eyes are on 48. So people will buy right here, right? And then they'll have their targets up at 48 and they'll have a stop loss down around below price, right? So if you look at price, maybe they'll have what's called the stop loss, where if price goes against them, they're automatically taken out of the trade. And there's a lot of them right in this kind of 43,000 area just below price. So the market makers can make a lot of money by pushing price into people's stop losses, right? To cause them to stop out, because that just acts as liquidity for them. So because there is a stop loss so close to price, and in the short term, the charts can easily favor a move down, then there's a decent probability the price will get pushed down into the stop loss before it's allowed to go up. And in fact, it may never go up. I can tell you, though, it wants to go up. That is true. The higher time frame algos say it's bullish. So I do think this will happen, but will this happen first and then it'll go up? That's also a decent likelihood. So we got to watch out for that. You know, look, here's the deal. That's a massive risk to reward. So this is like a 7-to-1. So even if you're to lose that trade and price heads down and then you find another trade like it and the algos still favor a move up, now you're looking at like, still a good 6-to-1, 7-to-1, right? Depends on how tight you can get your stops and things. But still, even at a 4-to-1, you're still doing well, right? You lose a 4-to-1, you win a 4-to-1, you're still winning 2-to-1, right? So actually, I think you're winning. Oh, gosh, I got to do some math on that. That's funky math. Funky math is too early for that. All right, cool. So we got just a couple minutes left. I know we just got a couple of people watching. I'm going to throw the QR code up. If you have a question, if you have a chart you want to see, go ahead and ask for it. I'll be happy to chart that for you in the few remaining minutes that we have left. In the meantime, we teach people to be traders. I think it's one of the last kind of exploits that we have. We saw a lot of businesses get ruined in the pandemic, and we're seeing a lot of businesses get ruined for a lot of reasons, especially here in the West. So one of the few things that you cannot be fired from is trading. And it actually isn't that hard to learn. It takes time. It's simple. It's not easy. Let's put it that way. It doesn't take a big math degree. It doesn't take computer programming, anything like that. You just come over here, check us out. We'll help you learn, all that stuff. So do that. If you're watching on YouTube, like, subscribe, so on and so forth. there are just a couple of minutes yet left. So if you have a chart that you want to see, let me know. In the meantime, I'm going to take a look at Solana. I know that it is kind of the hot ticket. Happy Friday, Trev, over in the private room. Appreciate that. So, you know, Solana just nuking upwards, you know, touched 100. I know a lot of people were looking at 100 for Solana. I think Solana is getting bought because of all the meme coins. It's a big thing right now. So meme coins is a big game in general, right? And so because now there is a Solana based meme coin market, we're seeing a lot of action head over to Solana because you got to hold Solana in order to play Solana meme coins. So that is probably why that's going down, but one of the many reasons why Solana is going up. And I told people, and I know we got one person who might be listening right now. I told people, I didn't give any investment advice, but I did tell people back when FTX fell, I said, look, Solana now is on sale. FTX is built on top of Solana. Solana's fundamentals have not changed. FTX is the problem. So because everybody's liquidating their Solana, the price is going to go very low. And Solana is a great coin, and I think it's going to go up. Now, do your own research, but I think Solana is going to do well. And a lot of people I know bought it at that time, which was like a long time ago. So understand that, you know, just kind of watching my shows, you know, I do drop hints like that. And of course, I don't recommend that you go do anything. I recommend that you do your own research, but I will drop hints as to my own opinion. And I said that, I mean, easily, in say like, I'm going to guess like April or May, even June. I've been saying that back when Solana was down at like 15, you know, bucks, 20 bucks. So anybody who listened to me has had their money times 5 if they did their own research and it looked like mine. So, you know, that's just one reason to kind of stick around. The Cowboy will give you clues. In the meantime, I'm going to jump away from the private show. I'm sorry, from this public show. And again, here's the QR code one more time. Zap that, come visit us. Much love to you all. Enjoy your weekend. And by the way, I may take a few days off. We got Christmas coming up, so I probably, you know, may not do any shows there.